Hello, YouTube. It's now been 17 days since we opened up 2024, but the S&P has gone basically nowhere. We opened at 472.16, and we're basically exactly there right now. So Jeff Gundlach, an elite investor, tells us that the S&P looks risky, and there's a 75% chance of recession this year. And a firing frenzy is looming. Whoa, that seems pretty doomy and gloomy. Another headline here: Double Lines Jeff Gundlach sees very painful economic downturn. S&P now may be forming a double top. So that's what we want to talk about today. We're on the cusp of falling back into neutral. We're sitting here at 57. Earlier, it was at 56. So now that we know that the wheels are in motion, we've also talked about on the weekend about how we go from extreme greed down to extreme fear, extreme greed, extreme fear, extreme greed. Are we heading back down to extreme fear? Well, the market would be tanking if that's going to be the case. So we're going to go through and talk about these big bearish headlines, what they mean for stocks, because that's what we really care about. And more importantly, will we have the patience to listen to the big man, Warren Buffett, when he says that the stock market is a device for transferring money from the impatient to the patient? Are we going to have patience to actually let these patterns play out? We've been talking about them, but there's been a lot of noise out there. So when we think about where the S&P is so far this year, we closed out last year at 475, and now we open at 472. We went as low as 466 and as high as 478. So what this really comes down to is the fact that when we look here to the numbers that are simple, over 480 is good, under 470 is bad, and in between is neutral. So we have a low of 466 so far this year, which means we went into the bad territory. We revisited that zone again today. And I'll just bring back my lines here. So if we go back to our daily chart now, we talked about that 3-day warning where we get the same thing: fail breakout, lower high, lower low, lower high, lower low, and we close below the low for 2 consecutive days, which means technically there's now a corrective wave underway on the S&P. That's on the 1-day chart. When we talk about an annual chart, what it means is that we've now revisited the bad zone, and when we poked below the first time, we went to 466. If we now revisit that area, we're tapping a support zone, which means it's probably going to fall out. That's what almost happens every single time. And I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel. That would be such a big favor to me, and I'll thank you ahead of time because you guys have just been so good. Thank you. Thank you so much. So anyways, when we hear about this double top, we hear about risky warning a year ahead, right? Super risky, looks risky. There's a 75% chance of recession, firing frenzy. Yes. That is a lot of noise. I'll get to that in 1 minute, and then we'll come back and talk about exactly what is actionable right now. But what I want you to focus on is a simple story, because 2024 is going to have a lot of noise. We have an election year, and we went into the bad zone. After we went down into the bad zone, which was 470 right here into, where are we here? So we went 466 to start the year off, right? We get our, let's make it nice and easy here to follow along. Let's go to candles. So year opens up, we go down. Now we get a dead cat bounce, and now we're down again. If we form a higher low, good. If we form a lower low, bad. Why? Because now we're going into a corrective wave here after butting up against resistance at 476 and 477.56, which means that we technically went into an annual higher high, which means we're higher than the previous year. But now this is an annual failed breakout. It'll also be a monthly failed breakout. Why? Just an annual failed breakout. So now that we're up against resistance, and the last time the bulls got us down here, they punched us higher. We went a little bit higher, failed break. Now, as we're coming back down for a retest, if we don't form higher highs and higher lows, it's going to fizzle out. And as it fizzles out, that's bad, because the bears got us into bad territory by getting below 470. And as the bulls made their charge, they stalled out at 478. They did not even make a new all-time high. We need 479.98. So this push-pull that is currently happening with the bulls and the bears, push-pull, push-pull. Well, eventually one team's going to win, either down to support at roughly 455 and our 50 DMA before that at 460, or we're going to punch over, hold 478, and then advance to 480. That's it. It's just the two numbers. So what he's talking about is he's giving us a warning for the totality of 2024, because he's talking about this year. So yes, I would not disagree that if we see multiple monthly candles that are giving us those warning signs of lower highs and lower lows, 100%, we're going to be going into a corrective wave. What I've mentioned is that for me to be wrong, I need to see lower lows on the monthly. Until then, The pattern we are currently respecting is the same as 2020, where on the monthly time frame, which our big man Warren Buffett is going to tell us that just be patient. Wait until the end of January because there is no pattern break yet. We have a higher low, we have a higher high. We even have the red candle like we did back in January of 2021. So history does not repeat itself, but it often rhymes. Red January after two big green months. So, right, red move, two big green candles, two big green candles. We get a red candle when everyone's scared. Yep, red candle when everyone's scared. Over resistance, check, check, check. But as we're telling you today, there's more things to worry about. That's why they call it the wall of worry. There's always more things to worry about. So until we get a lower low, I think that this pattern's playing out where we can go higher for 11 months. The second we print a monthly lower low, all bets are off. And I say that because that's the pattern that I am channeling my inner Warren Buffett to say until we get a change in direction, which means higher lows and higher highs. Let's see if this pattern can play out. Because to be early is just like being wrong. And these bears might be right, but they've been waiting for such a long time and they've managed to make exactly no money. So I don't really care about them. I appreciate Jeff Gundlach's point of view. I agree with a lot of his analysis, but fundamentals and technicals are two different things. So he's talking about fundamentally and technically. He sees the potential for a double top. So if we get over 480, I can guarantee this guy would flip too. He would say, now we have to be below 480 in order for that to be valid. So if we go back to our notes from the weekend, what do they tell us? Right? Again, a simple story. So the simple story here tells us that, we're about to go back into that neutral zone. And that's when we go from extreme greed to neutral and then it washes out, right? Ooh, well, third wave, we're now down here to basically a neutral. And our story here was that, and we had the Samsung phone reveal today. Man, what a big nothing burger. I was looking over it. It just looks like some software, to be honest, a new phone, whatever. Doesn't really look like there's hardware or a real AI. And we read that article this morning about Samsung sales tumble 35%. So what this just seems like is it's a lot of headline hype. So Samsung profits tumble 35% as chip weakness persists. Technology industry has been struggling with soft demand. Oh, okay. So their phone's not really that great. That's just my opinion. There we go. So the only number that matters is 480. That's like really simple. Let's look at the top headline here again. Why? Lots of noise out there. So lots of noise with news, economic data, and earnings. It is best to focus on levels into the end of January. Are we over 480, right? When we get there, we haven't even gotten there yet. And then the same recipe here. Green year to date, we got VIX, 10-year note, dollar, S&P, NASDAQ. What's green on the day and what's red on the day? Our bearish team is green on the day. We've got the dollar up. It did sell off. So from its open, we can see we now fell back below the 200 DMA, but it's green on the day. Volatility is up 7%, made an advance to 15.4, nearly tagged the 200 DMA. US 10-year note up another 1.13%. So what does that mean? Man, the bear team's flexing a lot more than I would like. I'm not comfortable with this right now, to be honest. We're still in a yellow light, which means we're actually approaching that area where we would expect to find buyers. I'm just not sure they're going to be coming in because the volume's kind of stinky right now. We look at the volume and it's just like weak. So as we keep forming the sideways action here, the volume's been dropping off. So I think we're finding equilibrium. So think of equilibrium like a spring where we're getting we're coiling up, then it's going to explode either to the upside or we coil up, and explode to the downside. That's where the volume is going to eventually come in, right? Big volume should be coming in. It's what happens over and over. We look back to here, right? There's the washout, there's the volume, right? There's the washout, there's the volume. Happens over and over. So I'll just be watching for it. I would note that we do have a nice lower tail today, but selling off does not really make me bullish. There is like some support here, but 455 is a really, really strong support area. And then if we delete everything, our 50 DMA is now curling up pretty fast. So now that's here at roughly 461. So we should find support at 460, 455, and we've already pierced below 470. So that area has been breached. Cannot call that support now. All right. So we hear about Jeff Gundlach. We hear about Warren Buffett. The story seems like awfully simple. Two more quick things before we sign off here are just going to be looking to year to date. There's a lot of things that are not working, right? Tesla is not working. Energy is not working. Utilities is not working. Finance is not working. Unless you're NVIDIA or AMD, man, it's not working. Oh, it's not working. Nope. Technology like Microsoft, Google, Meta is working, but a lot of things are not. So I think what it really comes down to is what this GDP print's going to come out finalized for Q4, and then what really happens with Q1. So I think the first quarter of this year is when, if we're going to get that 75% chance of recession, well, it's going to have to start pretty soon because we only got 4 quarters. So that's it. Thank you for watching today's video. The weekend deep dives now queued up here on the left-hand side. And come subscribe and hang out with me tomorrow at 9 a.m. I will be streaming live through the open. Thank you so much for tuning in. I'll see you tomorrow.